Good afternoon, good evening, everyone, wherever you're located in the world. This is Mark. Thank you for watching another Greenbridge Investing market analysis. This is a live stream. So if you're new, make sure to, if you have a symbol or a market you'd like to see, a stock, please put it in the chat now so that once I complete my analysis, I can go over charts that you want to see. Okay, so in this session, I'm going to be going over I'm going to spend a bunch of time on Bitcoin because this is it's a very tough situation to sit through, especially when you have rules to follow. So I'm going to talk about that and the psychological effects that you must deal with in these type of situations. Okay, and when it comes to having a very specific rules-based trading plan. Then, of course, I'm going to talk about the stock market and some stocks. So again, whatever symbols that you have, let me know so I can go over them for you. All right, so hey, Michael, good to see you. All right, so with that being said, let's get this started. This is for educational purposes only. For investment advice, please consult the licensed investment advisor. Now, let's get right into it. Today is Monday, so you know what that means. We first have to go over the economic calendar really quick, all right, just to make sure that we know what's going on for the week. This is especially important if you get involved in any type of Forex or CFD trades. Now, we have RBA, Royal Bank of Australia, whatever, meeting, Governor Lowe's speech, meeting minutes. Not going to worry about that stuff. Again, what's going on with the dollar right now, these major Forex pairs, they're going to be kind of limited. All right, we haven't had, we sent out a pound trade the week before, but before that, we haven't had a trade in a while. I was going to send out a euro trade, but I don't like what's going on. Okay, it's just not worth it. Tomorrow is Tuesday. We have U.S. retail sales. These numbers aren't going to mean anything. We have a lot of uncertainty right now that the market's trying to, market's obviously waiting for something. And unless there's a huge surprise in something like this, it's really not going to be meaningful. So don't pay attention to it. Bank of England Governor Bailey's speech. That can affect our pound trade. So if you're in the pound, at least you want to see how it reacts. I mean, that's at 9 a.m. Eastern time. The pound, we'll take a look at the pound, okay, from a technical perspective and see what is reasonable to expect based on what the trend is telling us, okay? Because remember, these items that we see on this economic calendar, they serve as a catalyst. It could push the market further one way or not, okay? It's not our job to sit here and figure out how the news item is going to move the market. That's cause and effect. What we have to do is just be prepared for a broad move either way, okay? And we have to be prepared for the risk if that broad move is going against us. That's what we do with this, all right? People look at this and they say, NFP. I need to figure out how to trade NFP. You're not going to figure out how to trade NFP. All right, so Canadian Governor Macklем's speech, who cares? We're not in the Canadian, and who cares anyway? Again, Royal Bank of Australia speaking. These aren't big deals here, okay? Consumer price index for the pound, not worried about it. Bank of Canada price index, not worried about it. Employment change, Australia. All right, so I'm not seeing any U.S. numbers here, okay? New Zealand general election. I wonder how that's going to go. And then they have their unemployment. Australia has its unemployment rate on the 18th, right? The 19th is New Zealand general election. Retail sales, Australia, again, China, interest rate decision. I mean, this one may be somewhat sensitive. What is that? It's 8:30 p.m. on the 19th. So, I mean, possibly. And again, Canada and New Zealand. These aren't major catalysts here, okay? So there's really not a lot going on the Forex front, or at least the scheduled economic events front. Numbers or events that you really need to pay the closest attention to are FOMC meetings and NFP. Yes, those are US based, but the dollar is a heavy weight, and whatever changes in those reports, and in recent times there hasn't been any major moves or any surprises even in the US reports. So that's why you just have to keep it in mind. It's a good habit to just be aware that they're coming out and being prepared, managing your risk, or perhaps adjusting positions based on potential outcomes. Okay? All right, so let's get into the charts now. All right, so let's say hi to everyone. Hey, Michael, Ricky, nice to see you. Monica, hi, nice to see you. So Ricky's asking about BMRN. Okay, cool. Yeah, we'll get to that. No problem. So again, if you're new, please share the symbol that you want to see in the chat now, so that once I get through my stuff, and I'm going to try to make my stuff brief so that I could spend more time on the things that you want to see. Okay, so let's begin with Bitcoin. And let's talk about the situation here, because this can be very confusing, especially for a newer trader. Now, you can see I have this box drawn in here, and this box around that mid 16K area, 16.4 area, something like that. And that's actually a reversal zone, okay? Meaning there's a greater chance that the price will find selling activity. Now, it found some selling activity, as you could see, but it was compromised, or it was reversed. You see that? We had an inside bar to go along. That was yesterday's close, and we took out the high. That's a buy signal. Now, why didn't we call this signal? That's a valid buy signal based on the strategy that we employ, our swing trade strategy. But the thing is, signals alone are not enough. And that's the point that I want to make here. A signal can appear randomly. And people don't understand that. They're just hungry for a signal. Oh, a signal. The reason to do something. I'm going to do it. And for our strategy and the time frame that we follow, this is a very high risk signal. It looks good now because this thing would be up about 700 points, right? Look, the entry was at 16,170, around there. Maybe 16,200, right? We'll be fair, 16,200. And right now, this thing is at 16,800. So it's a nice 600 point profit in there right now if you had taken something like that. So again, after the fact, looks great. But we cannot ignore the location and the probability of the location here. We're not going to buy highs, okay? Now, for a swing trade, in the chat room earlier today, I talked about a day trade. This is a better situation for a day trade. Why? Because you can take tight risk on a day trade, and you can at least capture the potential to capture some of this profit is more reasonable. But if you're not a day trader, or you don't understand the day trade mentality, which means if it turns on you, you have to get out fast, or you have to respect that stop, which is highly likely to get stopped out. Okay, that's the mistake people make. They don't respect the boundaries of a day trade, and they get in, and if when it works out like this, like, oh yeah, great, cool, that was easy. But when it doesn't work, they stay in the trade, and that initial risk of a couple of 100 points turns into a 1,000-point loss or more. That's the mistake. So we don't day trade. Our strategy is swing trade, which means we need to see a swing trade location. This is not a swing trade location. By the way, some news came out earlier today. I saw a bank. What was it? Who was it? Was it Chase? I forget which bank it was. Came out and said that Bitcoin, they raised their target or whatever it was. Nonsense. Here's the thing. And people that don't know any better, they actually follow that stuff, and they, human nature kicks in, and they think cause and effect. Oh, if this bank says this, that must be credible information. Understand, banks are not your friend. Banks could not care. They could care less about putting out information to help retail investors. Who are they helping besides themselves? They're helping their VIP clients. Okay, so do you think a bank is going to want to put out some kind of information that's going to make price worse for them or their clients? No. This is an opportunity for them to attract liquidity, meaning retail traders, and a way for them to distribute or to get out of their positions, right? Because when you need to get out of a large position, how do you do that without depressing the market? You need to attract a lot of people to start buying. So what do? You put out some report, some very optimistic report. It could be true. Maybe it's not true. Who knows? But the thing is, they put that out. Where was this report back here? Where was it at 10.6? Where was it at 11.4? Where was it? Why does it come out here, up in this area, and now we have this candle to deal with, right? Why? Because this gives them the opportunity to get out, or to at least help their clients get out at a favorable location. They're not going to sell the top. They know better. They know what they're doing. Okay? But if they don't want to depress the market on their clients, they're going to do something like that. Okay, this process is nothing new. It's been done for probably since the beginning of the market in the 1700s. I'm sure similar tactics were used, right? There were a lot less rules back then. In fact, there were no rules. But the point is, getting a crowd excited about something helps the smart money get out of stuff, right? They're not, these banks and all these, the smart money is not buying here. They would be foolish to do that. So most likely they're taking this as an opportunity to distribute, or at least reduce, maybe not completely exit, but reduce their positions, right? Reduce risk and unload the risk onto people who don't know any better. That is how a financial market works, okay? As a speculator, the reason why a financial market works, by the way, is because as a speculator, our job is to assume risk and get paid an outsized return. Okay, so like for example, in the futures markets, you need speculators to make that market work, because a producer, like a farmer, needs to protect themselves, lock in prices or whatever. Who's going to take the other side of those trades? Not another farmer. Okay, a speculator, someone that's trying to time the market, is willing to take the risk. Right, the farmer has product that they're trying to move, and they need to lock in prices. They have costs. They're working their business. They're doing their business. Okay, they need someone to get them, to help them reduce that risk. That is the job of a speculator. That is what we're doing. So again, my point is, this is a bad place to be getting involved. I don't care about the breakout. There were some favorable technical patterns, but as many of you know who are in the chat room, our trades begin with location first. If the location is not in line with the rest of the strategy, we do nothing, okay? And I will continue to do nothing. I don't care if this thing goes straight to 20K from here. I will not do anything, so now as far as where will I do something, 13K, 13.8, 14, that would be ideal. We may not pull back that far, okay? That's possible now that the thing keeps pushing highs. I may have to be happy with maybe halfway. Or slightly, maybe in the mid 14s, maybe high 14s. I may have to adjust to that. But I want to see structure, okay? If anything, I'm not going to buy a high. I want to see some sort of pullback. Now, some HS had a question in the chat room. I just want to answer that one real quick before I move on, because it relates to this. And her question was, what's the difference between initial support, minor support, and a major support? I believe that was her question, and I want to answer that question. It's important to understand. So a minor support is going to be one that typically, now those are sort of vague terms, okay? But a minor support is something that I would classify on either a smaller time frame or something with very little structure and very little time. Like on this time, for example, like a minor support here would be this level right here, the low, 15,786, because there's some buying activity there. There's even an inflection point. If we go back, right, you can see the flip here. There was resistance there, became support. You see that? So, okay, hold on a second. Hold on one second here. I got to fix something. All right, so now as you see, let me just back this up here. There was an inflection point there, and this would be minor. So why is that minor, not major? Well, for one, there's no magnitude to it. It's very shallow, okay? This is very shallow, and there hasn't been much time spent here. I mean, you could say there was some time back here, okay, but relative to other structures, all right? So a more significant support in this situation is we want to see where time was spent, okay? You had a little bit of more time in this area right here in terms of candles, okay? So there was a little bit more time there. Not a whole lot, but there was some. And then if you go further back, you have this little area here, right? So there was some time, but the lower we go, the more significant the support is going to be. You know why? Because there's going to be more interest in buying there. So that's another factor. So we're looking at two things here. We're looking at how much time is spent at a level, and we're looking at where the level is relative to the rest of the structure. Now let's take a look at, so far what I've been talking about here are minor, right? These would be like minor supports. A medium support would be something like this area here, because this area, I mean, in recent time had some inflection, didn't spend a lot of time there, but it's deeper, okay? It's deeper. Now, a heavy support or a major support would be something like this, okay? Look how much time, weeks, it spent weeks in this area as a resistance. What is that, the 11, what is that, the 12? That's the 12, okay? We talked about this level for a long, long time. The 11,300 to the 11,600 to 12,300 resistance, right? Talked about that for a long, long time, and spent a lot of time there. Not only in August, but if we go back, you could see back in August of the previous year, it spent time there as well. All right, so that's a heavy support. That's a major support, and if price actually gets that far, there's a very high chance that it's going to find buying activity. And there's a high probability not only of a bullish reversal, but of a potential broad move higher. That's the highest quality trade or the highest probability trade we can see. Now, will we get that opportunity? Will we get this opportunity? I don't know. I mean, it's possible, but at the way it looks right now, it doesn't look very likely right now. So it's all, the only thing we could say, you know, people like, if you go on some of these public forums, people are always making predictions. They're always like, well, you know, Bitcoin's going to do this and then it's going to do that. But you can't really say that because no one knows what it's really going to do. It either does something and then we can adjust and weigh our probabilities and our potential risk reward, or we can't, right? So in this situation, again, these would be minor up here. Again, not much time spent up here and we're near highs relative to the broad move, right? In the middle, now we have, you know, we're going to have relative to the broad move, it's deeper, okay? And there's still not much time here, but it's still deeper. So I would classify that as a heavier support. And then, of course, you have the real major support, which is here, which is historical support, okay? So that's going to be classified as major. And that, you know, again, time and history, what has occurred here before. Old resistance becomes new support and vice versa. So that's where our major supports are relative to this time frame. Now you could do that on smaller time frames. You could come up with a major and minor support, you know, on a 30-minute chart. You can do that, but again, you have to adjust to the structure in those time frames. Now I don't want to confuse anyone. That's why I'm sticking to this time frame and how we're judging it on this time frame. So for us to even begin, you know, thinking of a trade, we need to be at some kind of support. And right at these prices, there's no support here. So why would we buy here, right? Here it was very tough because, again, we're still in a tough area. We're in the middle of this reversal zone at this point. So tough to take a trade there, unless it's a day trade. Very tough to take a trade. Not going to take one on a swing trade. We're not going to take that risk. We're not going to risk 1,000 points or more to make a few hundred. It's not going to do it. Okay, so we have to wait for some sort of retrace. These are very minor retraces. But now we'll see. Because here's what's going to happen, most likely. When this thing starts to pull back, everyone's going to start piling in long. People that felt that they missed it, fear of missing out, they're going to, oh, okay, I got the pullback. Or we're going to get the questions, is now time to buy if Bitcoin pulls back 300 or 400 points? But it's going to be too early to buy, most likely. Okay, and we're going to want to see that thing pull back until it starts giving us a buy signal, a clear buy signal. Followed by, well, obviously the level has to be better, and then we have to see a clear buy signal. Up here, that's a clear buy signal, just not at the right level. So these things need to align in order to get a high probability. Otherwise, you know, over time, it doesn't work out, and people don't understand that. They only look at right now, okay? Oh, right now, it could have been this, it could have been that. Right now doesn't help you in the future. So you need to look at trades over time, and you need to look at multiple trades over time. If you take the same trade 100 times, will it be a profitable strategy? That's the question you have to ask. The way we do it, yes, we know, right? And our track record demonstrates that. But people who don't know, they have the lottery ticket mentality, and that's not going to help you. So we have to stick to our plan and wait. Okay, so that's my Bitcoin talk. If you have any questions about it, I hope I answered your question about the support and resistance levels. If you have any other questions, let me know. So let me move on here now. I talked a lot there. All right, let me move on. I want to talk about the stock market real quick, and then I'm going to get to your questions. Again, thank you everyone for asking the questions in the chat, and I will get to them. All right, so let's start with the S&P real quick here. And by the way, let me just say this. I just have to say this part. If you're new to Greenbridge Investing, please make sure you subscribe to the YouTube channel. Please press the like button if you like the video that I'm doing. And also, please check out our website at greenbridgeinvesting.com. We have a swing trade signal service by text, by email. We have portfolio management ideas, and we have a chat room. We've been very active in stocks in recent time. Bitcoin, we haven't had many trades, as you can see, because we're waiting for the right levels, and that's just the way it is. Some environments will provide more opportunities than others. You know, the goal is to take risks that make sense. Anyway, check out our site. We have a 7-day free trial. See how you like it. We are going to raise our prices very soon. Okay, like very soon. I keep saying that, but you'll see it's going to happen. And we're going to only raise our prices on new people that join after we raise the prices. Okay, so if you remember, when we raise our prices, they will not be raised on you. All right, so let me just, let's move on here. And let me know if you have any questions about that as well. So let's talk about the S&P. S&P is in a very similar situation here. Now, the week before, we talked about this location, right? We talked about how this is a potential resistance, failed high area. We even had a bearish candle develop and take out the previous low, which was actually a sell signal. Now, I was considering sending out a swing trade idea for like whether the NASDAQ or the S&P CFD, but I waited because I want to say, let me see how this thing behaves because I'm just a little, you know, I don't know. I wasn't too crazy about it, okay? And it faked everyone out. And now look where we are. So I'm glad I didn't send that signal out. The thing is, what's going on here? And this is stock market uncertainty. We have this conflict all over the place, right? The S&P was weak and now it's kind of acting strong again. Now the NASDAQ's acting relatively weak. That's a mixed market. All right, so the thing is what we can't lose sight of, everyone's going to focus on this and say, oh, stock market's going higher, oh, right? You're going to see that all over the place. But what we cannot lose sight of is this, right? We have a bearish pin bar that was established, I believe that was what, after election day or whatever, that came out. We have a resistance area based in August right there. And that's where we're fooling around. This is a vulnerable location for stocks. So although we are still doing things with stocks, okay, we're being very careful though, because we recognize the location. So just like Bitcoin, this is a tough spot. And no one, you know, everyone thinks it's fine when it's all green, but when it pulls back a few hundred points, then everyone, oh, we're a bear market. And then you go on to CNBC or whatever, these other news stations, oh, market's selling off. And then no one wants to buy anything. And that's when we start buying. All right. So again, location first. This is not a good location for longs, at least not long-term longs. You know, day trades, that's a different story. Swing trades, possibly, but you have to be very careful. You know, in these situations, we'd rather adjust with smaller size and stuff like that. All right, let's take a look at the NASDAQ. Right, and here's where the problem is. So the S&P was looking decent, right? NASDAQ is still somewhat mixed. We have this doji here. This thing is going to close, what, in a little more than 30 minutes. We have bearish price action established over here, right? These red candles. This can easily turn into a lower high. It could, right? It could. And all you need is some bad earnings report coming out or something, or some other catalyst. Perhaps the market is waiting for some more certainty with our ongoing election situation. You know, I don't know. I don't look for cause and effect. What I do look for is behavior, price behavior around levels. I know that this is a vulnerable level. Okay, that's clear. I don't see a sell signal in the NASDAQ right now. Now, another trade that we called was the IWM puts, which is the Russell 2000, because he was looking for that NASDAQ to follow through. And now look at this. Gap, higher. This is not working very well. This thing is acting relatively strong to the S&P and NASDAQ. Because as you saw, the S&P and NASDAQ were not pushing their highs. This thing's on its high, which is unusual. Okay, and look, it's way above those March highs. It's unusual for this thing to behave that way. But hey, it is what it is. We have to accept it. All right. Now, this may double top. This may produce a failed high, especially if the general market turns. And that's what we have to watch for. A lot of gaps in this thing. All right. This is the Russell 2000, by the way. And the IWM, or the QQQ, like these charts are not the best charts to make decisions on. You want to use the futures charts, because look at these. There's a lot of sporadic price action in here, and these aren't going to be very helpful. As opposed to like the CFD, which follows the futures, the charts are much more complete, and you can make much clearer decisions off of them. Okay, so anyway, I just wanted to point a couple of those things out. All right, so let's, all right, before I get into, let's just take a look at one more thing before we get into your questions. I want to talk about the euro. This also goes for the pound for Forex traders. So the euro, right? The euro, 1 minute the euro looks like it's going to be weak. Then it looks like it's going to be strong again. Then it looks like it's going to be weak. The euro is still fooling around in a resistance area, okay? High or low, there was an inside bar to go long. I saw this on Thursday and Friday, but I'm like, I don't know. In the middle of the range, might break out, might not. It's a 50-50 trade. I don't want to send out a 50-50 trade, you know, because it might work, but I want to see something better than that, okay? I want to see this type of pattern at a low. That's where I want to see it. That's where I'm very convinced. That's where I'm compelled to send something out. Not here. This is like, you know, it might work, but, you know, I don't know. I wasn't too crazy about it. So look where we are now. Not a place to be buying, okay? Not a place to be buying. Let's take a look at the pound real quick. The pound, GBP, USD, okay? The pound, similar situation where recent price action has been somewhat bullish, higher lows, higher highs, but it's in a tough spot, okay? Now, I know people will resort to, well, what's going on in Europe? You know, like Henry does this on the show a lot, on the podcast. Well, you know, in Europe, blah, blah, blah. I don't care what's going on in Europe. I don't care what's going on in the UK. What I care about is what's going on in the chart, because I'm a short-term trader, okay? And if the chart tells me something that's not in line with the fundamentals, I'm going to believe the chart before I believe fundamentals. All right, so here's the thing. We're still at this resistance area. Might go higher, might not. We have a short in this thing. Is this a better place to be long or short? I would agree with the short, because we're not at a support. We're at a resistance. Are we fighting a structure? Yeah, sort of. But this is more likely to be a range. This is not really a trend. Because if we look at the bigger picture, we have not made a new high yet, okay? And we're not taking out any lows yet, but we're near a range high, all right? Which means it's possible we test the middle or we test the low. Those are possibilities, and we're short for that possibility. So just wanted to point a couple of those things out in terms of perspective and why we send out the trades that we send. All right, so let's get into what you guys want to see. All right, so let's say hi again. Michael, nice to see you. Okay, Ricky, got you guys. Okay, so Ricky, could you please cover BMRN, USD, GBP, and gold? Okay, sure. Oh, gold, the Barrick gold. Okay, no problem, no problem. So let's start with BMRN. Again, if you have any tickers you'd like to see, please share them in the chat. All right, oh, pharmaceutical. Now, so look, these are very news sensitive, and look, right off the bat, I don't like this stock. Here's why I don't like it. You know, for one, there was a nice trend, okay, going into October there, but now you have this gap, right, or whatever, this gigantic gap. Now, markets tend to want to close gaps, but here's the thing. Where's the recovery on this thing? Right, all you have right now is this range, okay? You have this lower high range. You know, the wind got knocked out of this thing, and it, you know, why is it not taking out this resistance here at, what is that, 80? Why is it not taking that out? So I would be concerned about that. This thing should be taking that out. First of all, to get back on the long side, you need to take out that resistance first and then look for a higher low. I would leave this thing alone right now, at least where it is right now. You're at this little mini range. We can call this a mini range, and it's like a range high. No reason to take risk here. If you're going to take if you really must take risk, at least wait for a range low in this area here. What is that? 71.25 area, something like that. That would be a failed low area, 71.25. If you're going to do it, that would be your better place to do it. Not exactly here. Here, it might go higher, it might go lower. This is one of those 50-50 situations, kind of like I was pointing out with like the NASDAQ and stuff, or even with the euro. Wait, okay, I would wait. So either this thing pulls back and gives you an opportunity, which again, it's still risky because that would then, this structure, this entire structure could be a lower high and it may make a lower low. All right. But at least if you're buying into that support, at least there's a possibility. You should, of course, wait for confirmation and a setup, but at least you have the possibility that other buyers will step in there as well as they have previously. And, you know, if it's going to try one more time and not make it, you know, through that resistance, at least it'll be in your favor for a little bit. And you can, you know, you'll have some flexibility in that rather than, you know, buying it now and just watching it pull back to support and then break. All right, so that's what I think about that one. Now, you asked about USD GDP, which is the inverse of the one we look at, right? This is the dollar against the pound. We look at the pound against the dollar. So if we're short the pound against the dollar, then you'd be looking for longs on the dollar against the pound, right? It's the inverse trade. So in this situation, if this is the chart that you're considering, if you're looking to buy the dollar against the pound or short pound dollar, which is the same thing, then in this situation, you have a higher low developing here. You have a failed low situation and a higher low developing, all right? Now, this current candle, this is a bullish candle, which is bearish for the pound against the dollar, and a break above this high, 75.94, a break above that would basically activate this as a new long. Okay, pound, that's dollar against pound. So if that makes sense. So if you meant pound against the dollar, then you have to take everything that I just said in reverse. Okay, so and just to show you that, pound against dollar, here, let's put that in here. Pound against dollar, right? It's the same chart, but inverted. So we're looking for this bearish pin bar to get taken out. We're still short. We got short earlier, but if this takes out the low here, 31.65, you know, we start trading 31.50, then I would expect at least another attempt to push lower. Okay, so that's the pound dollar, dollar pound. Let's see what else we got here. All right, so I hope that answers your question. So gold, as far as Barrick Gold. So Barrick Gold is the ETF of gold. This is probably the better choice if you're going to get involved with gold compared to some of the other instruments out there, because at least it's more stable. You have a support here, all right, and this is basically a reflection of the 1850 support on gold, which we've been watching. Now this has been a very tough spot, okay? Now if I show you the gold CFD, XAU, USD, if I show you that, I mean, look, it's the same chart pretty much, okay? We've been waiting for this 1850 area, all right? We've been waiting very patiently for this, 1840, 1850. Now, gold is in a consolidation. This is one of those situations where people like to get mixed up with fundamentals. You can get newsletters, you can go to these gold websites and blah, 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 conspiracy theories. Gold will be at 3,000 by next month, blah, 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 this and that. US is printing money like crazy, blah, blah, blah. Okay, so that all sounds good, but the chart of gold is not following fundamentals. Now, why is that? It's because markets are irrational. It's very simple. Doesn't matter why, is really what the point is. Have the fundamentals on gold changed? No. Should gold be pushing higher? Well, fundamentally, you would think it should be, but it's not right now. So what do? We don't get caught up in that mess. We wait for a support level. This is a major support, 1840, 1850. That's a major support. It's a range low that has a lot of time, right, based on a bunch of time there. It's also a psychological level. There's a lot going for that level. So we want to see a reversal in that area. At this point, if gold pulls back from where it is right now, we could get a failed low relative to this structure here and into a major support. That would be great if we could see something like that for a long. So going back to your chart, gold, it's the same thing. Okay, so your level would be, what is that? 1858. Is this the right thing here? No, hold on. That's not it. Gold, let me go to the right symbol here. Barrick Gold. Let me find that here. It's going to be a very similar looking chart though. Hold on. Let me go to stock. Sorry. Gold. Here it is. Barrick Gold. Right. So here's Barrick Gold. And it's similar. The chart is similar. That's why I always get confused when I pull up the gold CFD and I look at it twice. Okay. So it's the same situation though. It's just typically the stock ETFs are a little bit easier to deal with than the CFD. All right, because look, it's $25, 25 and a half a share. You can buy, a few shares. You don't have to use a lot of leverage, right? And that allows you to become a strong hand very easily when accumulating something like this. Now you have a pin bar to go long off this double bottom support. Again, gold is in an attractive location, but if gold pulls back a little further, this may give you that failed low. So is Barrick Gold a bad thing to buy right now? It's not a bad thing to buy. If you take out this high tomorrow, 2602, right, and you want to put a stop somewhere around maybe 24, you have to give this thing some room. Can't put the stop right below the pin bar. You have to give it some room because gold has some room where it may test slightly lower. Okay, so just because there's a pin bar at a double bottom support, keep in mind that this chart depends on the relationship with gold. So, this thing is not exactly trading on its own. So keep that in mind. But I like it. I like it as a long. Definitely great location. Definitely good structure. And you have a setup. Okay. Do you see the difference between something like this and Bitcoin? Bitcoin's way up here, right? Gold. This is what we want to see on Bitcoin. Something like this. This is a high probability setup, not Bitcoin. So thanks for pointing that out. That's Barrick Gold, GOLD, the stock ETF. All right, let me see what else we have here. Monica. Plug and FCell. Okay, the power companies, sure. I remember Plug. That's an old one. Oh, wow, look at that. Amazing. So this thing's gone vertical. You can't touch this now. Let's look back a little bit and let's look at support and resistance levels, right? It's the first thing I like to do. Look at that. Wow, what a chart. So we're going to start with the inflection points, right? You have one here. You have one here. Okay, those are our most recent ones. So this thing, buying this thing right in this area is a really bad idea. And now I would have told you that back here too. I would have told you that back here. I would have told you that back here. All right, back at the high of 2160. And this. All right, my signal goes in and out a little bit. I guess it's the internet usage around this time. Sorry about that. It may go in and out a few times. Okay. Anyway, so like I was saying, we want to see that $20 area. I mean, the level is actually 18 and a half, but it may not make it that far back. If this thing could pull back a few points, maybe the low 20s, and give a reversal, that would be an okay place to consider something like Plug Power. Okay, but this is definitely not a good place right now. So you want to see the pullback there. Let's take a look at FCell. I would imagine FCell is going to be in a similar situation. Look at that. Wow. Whenever something goes vertical, if you're in these, by the way, if you're long a Plug or an FCell, if you're long, when you see this, this is a time to distribute. This is a time to lock in something. You don't have to unload everything that you got. So maybe you have, who knows, maybe you have 1,000 shares of FCell from $1 or 100 shares even, right? How much should you sell up here on a move like this? I don't know, 20 shares, 30 shares, because there's no signal to exit. There's no bearish candle here. This thing may continue, but this is not a place to buy. This is a place to unload. Unload on the Robinhood traders, okay? I say Robinhood because they're typically reactive. This pops up on their radar and they all buy it because their friends buy it or whatever, and that's not how you do this. They serve as the liquidity to help you get out of your positions. That's just what they do. Now, right now we're at a resistance area, right? This area right up here, it's resistance. So what is that? What is that high? Basically 295, or 3.5. The 3.5 area, and this thing's at 370. So cannot chase these things. You can have a lot of breakout traders chase this thing. This is a place to distribute. So now, if you're not in it, what do? Wait for a pullback. That's all you can do. Can't chase this thing, okay? Wait for a pullback. In this case, that would be in the mid twos, something along those lines, in the middle of this consolidation. That's a nice consolidation that's gone on since June. So a retrace into that area would be your opportunity to do something. Now this is a very inexpensive stock, so you're going to have a lot of day traders in this as well. This pops up on all their radars. Oh, $2 stock is up 30%. I'm going to buy 10,000 shares and sell it for 5 cents. I mean, that's what they're going to do. Okay, you don't want to get caught in that mess. So, you get that pullback. That's where the opportunity is, somewhere in there. The range I'm not a big fan of buying in the middle of a range, but at least if you retest a middle of a range after making the new high first, then there's likely support there. So it's either that or the range low. Okay, that's F sell. So again, the key mistake to avoid here is to get caught chasing these things into the highs, especially when they go vertical, especially. All right, that's an opportunity to get out. Okay, so I hope I answered that question. Thanks for asking, Monica. Okay, Seaboard, nice to see you. Okay, all about BTC. Okay, cool. Ilya, hey, nice to see you. Savi, okay, location, right. Michael, on BTC, on the chance it would keep going, where would you trim some more of the long-term investment? Okay, that's a good question Michael brings up. Let's go back to BTC. Now, keep in mind, we have multiple strategies running. I focus on the swing trade strategy all the time, but we do have portfolio. We do have inventory that we've averaged into. When Bitcoin pulled back to 3K, we were buying into that, okay? When many people were scared to buy into that, as many people in here can tell you, because they're in our chat room, they know, our track record reflects it. We were buying into that. We weren't buying tons, but we were buying it, right? And we've been trimming out. So Michael's question is, where would you want to trim out more on the long term? Well, in a situation like that, Michael, I would look at a couple of things. For one, I would go back, okay, and look where we were. Let's go back to 2017. And let's look at some of the levels back there, because those are some pretty heavy duty levels, okay, back there. And let's take a look at where those inflection points are. Look, you have one around here somewhere. See that? Right around there? There's an inflection point there. Right? It's not going to be exact, but somewhere between 16.8 and like 17, what is it? 17,230, around there. So for me, that would average about 17,000. So if Bitcoin could make it into the 17,000s, I would definitely trim off more of the inventory. Right now, at this moment, since we've trimmed, there's no reason to sell this right now, right? There's no sell signal. There's no pin bar. There's nothing there. This momentum may continue. So with the portfolio inventory, I would just wait, see how it behaves in the 17s. We see a bearish candle up there, trim some more. Okay, that would be the next level I'd be looking for. When Bitcoin starts doing stuff like this, you want to look at the whole numbers, especially as it gets closer to 20K. So 17, 18, 19, 19 half, 20. Those are going to be all inflection points where I anticipate some kind of activity, some kind of selling activity. Those would be good places to maybe trim some, just off of the psychological aspect, even without doing projections. Okay, that's just the way the market works. So good question. Savvy, sell news. Well, yeah, I mean that's typically the mentality, Savvy. When news comes out, right? It's usually the people that were putting out the news or knew about this news in advance. They've taken action, right? And they're selling it to you. So that's why, right, you always have to be very suspicious when a bank comes out with that type of news. Hey, Alice, nice to see you. Seaboard. That's the way it is, Seaboard, and it plays out in markets. And our job as a market timer, is to recognize the vulnerabilities of human nature and then take the other side of that, right? And capitalize on the vulnerabilities, which, what is the biggest vulnerability is really logic or if this, then that, combined with our reactive emotional makeup. I mean, that's what we do. We're conditioned to react emotionally. That's what it means to be human. So when you learn what those patterns look like in the price action, you learn what opportunities look like, and you learn how to capitalize on them. But more importantly, how to measure risk in those situations, which is really the key thing. So Joe, could you look at FTSE? All right, let's take a look. FTSE. Is that right? AM, is that, do I have the right? FTSE, is that the right ticker there? Is that the Financial Times? What is that? I don't know if I have the right ticker here. Oh, wait. Can you look at FTSE? Been crazy. And here, let me make sure I have this right. Okay. Well, if this is the right symbol, again, this is vertical, right? This is vertical with a gap over here. I don't like these type of I don't like charts that look like this. First of all, I don't like sporadic charts. Usually it means that volume is not that great in these things. You'll see this with a lot of ETFs, sporadic charts. But just focusing on the structure, all right? Let's just focus on the structure. If I have the correct symbol here, just focusing on the structure, we do have a broad higher low. You know what this looks like to me? This looks like a lot of the oil stocks, right? Like MPC and VLO and a bunch of other ones that Andrew has been talking about over the recent months, right? That were pretty much consolidating like this for weeks and weeks and weeks. And now they're all going nuts, right? So in these type of situation, again, you have a breakout occurring here. You can't, this is a very high risk situation. It may go higher, but when it's this vertical and when it's that steep, it can't sustain this for very long, this type of momentum. It's not very sustainable. So you have to be very careful of that pullback. I would leave this alone if I have the right symbol here. I would just leave this alone, okay? If you want to get involved in something like this, wait for the retrace. And you have to ask yourself, well, where can it retrace to in a reasonable manner? And that would be here, this support level right here, 556, okay? Sort of in the middle of that gap. Gaps typically can act as a support or resistance level. You also have some previous resistance there. It's also sort of in the middle of that previous range dating back to May. That would be the level of interest, okay? Not up here. It may go further, it may not. Anything can change. Remember, today's Monday. Anything can change between, the next few days. And everything looks great 1 minute, and next thing you know, right? So that typically, people get caught at the top. And then when you get caught up here and you have it from a bad price, as it pulls back, right? A normal, healthy, innocent pullback. We're not talking about a bear market. We're just talking about a retrace, right? People get caught at the bad prices. They get scared because it looks like it's going to go to zero. Plus they turn on the news and the news says it's going to zero and all that other stuff, right? So they get scared out of their positions at the worst price, the price that you should be looking to buy. Or they get margined out because they got too big and then they can't hold the position and their broker kicks them out. So anyway, that's the case no matter what market. So hopefully I got the right market there. All right, so thanks for bringing that one up. Okay, Joe. UKX, what is that? Let's see. Oh, okay, similar situation. Oh, UK 100. Okay, that's the same thing, right? It's pretty much the Financial Times 100, UK 100. This looks like a much better, this is calculated by TradingView here. Much more complete chart, but it's the same deal. It's the same deal that I just explained, right? So in this case, if you're interested in this particular chart, which is the same thing, what's the level on this chart here? 60.45, right? You want to see, that's the level of interest around there, not up here. Not this little minor thing over here either. This looks like Bitcoin, right? Looks just like it. So I would just wait. Nothing to do there but wait. If you're in it, you just let it run. Okay? If you're not in it, you wait. Two very simple, instructions. So thanks for bringing that one up. Where would we trim, what's that? Where would we trim? Got a question here from H. Ha Kaufman. Where would you trim some inventory? So if that's the Bitcoin question, I answered that. 17,000s. I would trim some more in the 17,000s. Again, you don't have to trim a ton of it, but at least take something off the table. You want to lock in profits at highs. Never a bad thing. Remember, you're never going to get the high of the market. Okay? If you're trying to get the high and you're trying to squeeze out everything you possibly can, you're not going to be happy. All right? So we're never going to buy bottoms. We're never going to sell tops. But if we're doing the right behavior, meaning you're distributing near highs or as the market's pushing highs, especially when they're very dramatic highs, you want to distribute. And when the market's pushing lows, especially when they're very dramatic lows, that's when you want to consider, taking inventory carefully, like we have. Okay, so thanks for asking. So HS, okay, cool. All right, so that was the support and resistance question. HS, can you please have a look at OMG and BCH? Yeah, sure. So let's see, OMG, USDT. So look, this one was exciting back in August. Man, since then this thing has been just complete out of play. Okay, out of play. So I don't like to see this when Bitcoin is doing what it's doing. Now maybe they'll play the laggard game, where they just eventually they catch up. But here's the thing: I judge these things. Bitcoin is the leader, as we know. Altcoins should follow. Okay, the major coins are following. Right? If we look at Litecoin real quick, look at Litecoin. Wow, Litecoin. That's what OMG should be doing. Okay, what Litecoin is doing, not what OMG is doing. So this is relatively weak, which means if Bitcoin pulls back, where is this going to go? This chart structure, so remember, people like to get mixed up with fundamentals, but the charts are a reflection of fundamentals that we may not even know about yet. Okay, why is so what this chart tells me is there's really with Bitcoin doing what it's doing, because again, it's relative to Bitcoin, there's no money flowing into this. Why? Why not? Right? Isn't it supposed to be a good blah, 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 and all the financial institutions are involved and blah, blah, blah. Okay, but there's no money flowing into this. At this moment, technically, you have a buy signal with this little, if it takes out this high over here, 30, what is it? $3.50, takes that out, you have a little higher low. But the entire range here, this structure is a consolidation while Bitcoin is on its highs. That's the problem. Okay, if Bitcoin was doing the same thing, I'd say, okay, this is reasonable. You could take your risk here, and if Bitcoin goes, this should go too. That would be my premise. But Bitcoin is way up here, and this thing is here. So this tells me that if Bitcoin pulls back, this thing will probably test its low. So I don't like this. I don't like it for that reason. Now, who knows? Like I said, maybe some news will come out and eventually it'll play the catch-up game. But if this thing is not looking like Litecoin and the rest of them, then it's off my radar. I don't like, especially altcoins. Okay, these are worse than cannabis stocks. So that's what I think about that, and that's why I put a lot less weight on the technical structures and patterns and signals that develop, because these do not trade on their own. Okay, they're supposed to be following Bitcoin, and so I'm gauging that relative strength or weakness. So if you really must get in, at least wait for a breakout or something. Okay, $33.84, something. But you're just keep in mind you're buying something that's relatively weak. Now BCH, here's another infamous one. Okay, this one should really be following Bitcoin. And look at this thing, right? It's consolidating. Look, this little attempt at a green candle today. Still inside of its range. Look at this range right here. This consolidation right here between, what is this low? 241 and high. What is the high? 280. And we're basically at 255. Not a good sign. Not with Bitcoin pushing highs. Again, if Bitcoin was doing a similar thing, I'd say, okay, wait for the range low or something, right? Don't buy it in the middle. Wait for a range low. Wait for a minor Bitcoin pullback and you have maybe an opportunity here. But there's no money flowing into this, okay, relative to what's going on with Bitcoin. That is a red flag. Again, if Bitcoin retraces, this thing will probably break its supports. So if you're not in this thing, I would not get involved in this right now. If you're in it, all you can do is hope for the best. Okay, if it breaks those supports, either you take a loss or get out or whatever. But if you stay in, you're just taking more risk in something that's acting relatively weak. Now, can that change over the next few weeks? Sure, it can change, but there's no evidence of that, and I'd want to see the change. Now, here's something interesting. Back here, right, it was trying to do something back here, right, and it failed, and it went back to these low 200s. So there's something fundamentally wrong with this. That's what that's telling me. All right. So anyway, just wanted to point that out. Hey Jay, nice to see you. All right. So I hope that answers your question about BCH. All right. So Peppy, hey Peppy Pants. Oh, cool. Oh, nice to know. Oh, cool. Okay. Thank you. It's nice to see another TradingView follower here. Okay, Ha Kaufman, could you please also look at LTC? Okay, so yeah, let's go back to LTC. So here's a winner. Okay, that's what a winner looks like. Now, Litecoin has not always looked this good. In fact, a few months ago, I didn't like Litecoin at all for the same reasons that I don't like uh, I don't like OMG and BCH for the same reasons. Because back then, I mean, for the longest time, this is garbage, garbage, garbage. It tried, and then it kind of turned to garbage again. But then it changed, okay? And the first change was breaking this resistance right here. And since then, we've been seeing higher lows and higher highs, and it's acting relatively, at least in line with Bitcoin. Okay, I like to see that. The question is, where do you buy now? Can we buy this thing right now? No. If you're in Litecoin, what's that? 71. Okay. If you're in Litecoin, just like Bitcoin, this isn't a bad place. If you're in from lower prices, this is not a bad place to take something off the table. Okay, again, not your whole position. Perhaps you lock in, I don't know, let's just say you have 100 coins. Let's just say. Nothing wrong with selling 10 coins or 15 coins. Lock it in on the highs. Lock it in on the buyers while they are there buying. They're very happy to take it off your hands. That's what you do here. Can Litecoin run to $80? It can. It could run to $100, but I doubt it's going to do it in a straight line. So if you're not in Litecoin, then I would be waiting for the next support level, right, to possibly get involved. And since it's following Bitcoin, I would also be using Bitcoin as my guide. So 63, what is that? 63 and a quarter basically, right? These numbers don't have to be exact. 63 and a quarter. It also coincides with this resistance back here. Old resistance becomes new support, that area right there. So that makes sense. I would like to see a test of that level followed by some sort of signal and confirmation. I would expect Bitcoin to be doing something similar. If Bitcoin has a dramatic pullback for whatever reason, then this thing is likely to have a dramatic pullback too. I want to see a relationship. If there's no relationship, like we saw with OMG, then I'm not interested, okay, with these altcoins, because these altcoins are highly suspect and most of them are garbage. So Ethereum and Litecoin and like Monero, they've been more in line with what they should be doing, so they'll stay on the radar. Money is obviously flowing into Litecoin. That's what the structure is telling us, okay? So I'm contrasting that to OMG because you see the difference. So something like Litecoin, wait for the retrace, use Bitcoin as your guide, just like we use S&P for stocks, okay? So good question. So Pepe, can you have a look at TNK? Sure, let's take a look. TNK. TK Tanker. So this is one of those oil plays. We had one of these with Stinger, right? Let's just see how's Stinger doing. Looks exactly the same. Scorpio tankers. All right, so back to TNK. These tanker stocks. Now, I guess with the anticipated oil situation, right? There'll be more demand for oil with things returning back to normal and the regulations coming back into whatever, all that speculation. These things are trying to turn around. Now, there is a higher low over here, just like in Scorpio tankers, and it's attempting to take out a resistance. Those are structural changes that are notable. All right, what is this resistance over here? Let's see, what is that number? So basically 11 and a half. Okay, if you clear, you have a higher low, so I would anticipate a higher high. I would anticipate that resistance to break, and that's possibly a trend change, possibly. Now, here's the thing. Generally, these things they've been very tough. They've been out of play. You could see. Let's just go back a little bit and look at the previous history, right? I mean, this gigantic structure going back to previous November of a year ago looks like one broad higher low, and the bottom has been established and it's trying to turn now. So from a technical perspective, it's looking like it's building strength, right? You're near a range low. You're not buying the high like in Bitcoin, right? You're not buying the high, you're buying near a low. So this may be a good long-term candidate. Now, short-term, these are slower. I'm not a big fan of these as far as swing trades go. But I know, like, for example, let's take a look at something like VLO real quick, because I know this was like this is not a very good example because it's probably not going to move like this. But this is one that we were getting involved in while it looked like garbage, right? While it was consolidating, and now we have all this price action going on, which you can't chase it now. But back to yours, which again was TNK. I would think longer term on something like this. And if you really want to be conservative, wait for the break. If you want to take it now on something like this, you can measure your risk. I wouldn't use this little higher low here at 10.16. I would use the low, okay, which is 8.98, basically $9. It needs to stay above $9, okay? That's how I would consider something like that. This is obviously, like I said, it's been out of play for some time. This may also be dependent on what's going on in the political situation here, besides the fact that everyone's expecting, more demand for oil and all that kind of stuff. So I just be careful with that. Perhaps you want to take a few shares and see if it starts to go your way. Okay, beginning with that breakout. Okay, a lot of times when you get that first resistance breakout like that, that could be the sign of a trend change, like we saw with Litecoin. So technically it's improving. I'll give it that. Okay. So again, I would also have a longer term expectation. I wouldn't expect this thing to do anything spectacular in a couple of weeks. So that's what I'd say about that. Okay, BIND, Beyond Meat. We haven't looked at this one though. I know, Pal, you brought this up in the chat room the other day, the free chat room. And I don't think anyone looked at it. This one used to be a wild one. Let's see what's going on here. So Beyond Meat, first thing I want to see are the support and resistance levels. You are at a support level, and this thing's at a range. This thing's in a range, okay? And it tried to break out of that range, gave it all back. Obviously, there's a gap over here, and it's trying to find support. Okay, it's tough. You're near a range low. You have a bullish pin bar to go long, near a significant support level. It's an aggressive long somewhat. Okay, I say that only because what makes me hesitate on something like Beyond Meat is this price action right here. That concerns me, and the reason is you have this established lower high right here. This is established lower high. This probably going to earn. I bet you that's an earnings report or something. I don't even know, but I'm betting. I'm betting it is. Okay, established lower high, sharp sell-off. Okay, and now it's trying to find stability. Okay, no problem. You do have a lower high. Okay, so and it also produced the lower low, which is what's likely to happen in those situations. But the support is holding. So again, in this situation, it's if you're willing to take the risk, which is what? It's not going to be that pin bar low, which is 121.5. The risk is going to be defined from this low, 13 and a quarter, 113 and a quarter. So you're looking at 8 or 9 points of risk, maybe slightly more. Okay, safe. I mean, I'd say it's safe to say because it may fool around in between there. Okay, that's one thing. But besides that, you do have a location that's attractive. You do have a setup. So the confirmation you'd be looking for is tomorrow, a break of this high of 127.89, or you can even use the previous candle, 130. Okay, and I'd be looking for a move higher, at least an attempt to fill that gap, which it's within reason to see what like the high 130s pretty quickly, and that's with the stock going nowhere. That's still not really going anywhere. Okay, that's what I'd be looking for on something like that, because will it go all the way up back to this range high? Maybe, but there's not enough structure to make that judgment right now. I'd be careful with this. Okay, I'd rather see a double bottom or something. At least that would give me more confidence that I'm getting in at a better reward risk, if anything. Okay, so that's how I judge that. These are tricky sometimes. Okay, these are tricky, especially like I said. What concerns me is this sharp gap and that lower high. If we had more of a bullish structure, I'd be a little more confident with it. But at least you have the range low, so you do have some things going for you. Okay, so thanks for bringing that one up. Let's see. Not loving the S&P. Right. So, well, the thing is, this is not a market stock, pal. So this is going to be more sensitive to the political situation, economic situation. That's going to be more sensitive to that since it's a food stock. I wouldn't worry too much about the S&P as much, unless there's a massive sell-off, right? Then this could probably feel it somewhat, but it's not a high correlation. So I definitely agree with that. All right, so let's see what else we got here. Okay, let me look through here. I'm reading through the chat. Okay, no problem, guys. Any reason you don't have volume turned on? Okay, that's a good question. So before I answer that real quick, wow, I've been talking for a while. Real quick, if you're new, please make sure you subscribe to the channel here. Also press the like button if you like the video that I'm doing. And if you can, check out greenbridgeinvesting.com. We offer swing trade signals by text, by email. We cover stocks, we cover Bitcoin, we cover Forex, we cover options, CFDs, things that are in play. We're not a day trading outfit where we do swing trades. We also have a chat room, and we have portfolio ideas by email as well. So a lot of information. Please check it out. We have a 7-day free trial. I would suggest you check that out as well, because we are planning to raise our prices soon. They're going to be a lot higher than they are now. Right now we're working for free practically, and we're not going to raise our prices on members. So if you lock in your prices now, you get the good prices. All right, we're probably going to keep it this low until the Cyber Monday nonsense that's coming up. Okay, just so you know. Now, let me see what else we have here. So, all right, so Pao is answering my question here about volume. Let's see what he says. Mark doesn't think volume is reliable for a number of reasons. Large players know how to make large transactions without reflecting it in the volume. It's a good answer. Yeah, the reason why I have volume turned off, for one, is it's pretty much irrelevant information. Keep in mind, like with the stock market and stuff like that, we're not getting the most accurate volume. Okay, for example, if you look here, this chart is based on the Chicago Board Options Trade, right? CBOE, BZX Exchange, right? BZX. That's the centralized exchange where the volume is coming from. This is not coming from the NASDAQ. This is not coming from. So what is this? What volume am I looking at here? Okay, keep in mind, large players, like Pao just said, large players have ways to hide their volume, so it's meaningless. If I see a volume spike, I mean, it may be somewhat of a reflection of retail traders, but it doesn't really help me. And it's a lot of times I found it throws me off. So I don't bother with volume. I look at levels, price action, confirmation. That's what I'm going by. That's how I'm judging momentum on these things. And the main thing is obviously the trend structure, and the levels. That's what I'm going by. Okay, that's why you don't see oscillators and volume and all kinds of other garbage on my charts. My charts are very clean. Right? And as you notice, I'm only highlighting levels, and I'm looking at candlesticks and structures. Okay, it took me a very long time to realize that that's the most important information. So Hamid, nice to see you. Could we consider Tesla's chart? Sure, let's take a look. TSLA. So this thing has been in a range for a while, right? Since what, we're going back now 2 months or something. And this thing is just not doing anything. Look at this, right? It's in the middle of a range. And so what do we do with this? I don't like middle of the range trades, for one. We can argue that there's been some buy signals here and there, but middle of the range is 50-50. It may work, it may not work. And I don't really like 50-50, right? I want something that's more in my favor, so I want to see a range low. Now, this symmetrical triangle, I agree. It looks like a symmetrical triangle. I could draw converging lines on each of those support and resistance levels. These type of triangles are typically trend continuation patterns, okay? And this trend is not bearish. So at some point, it is likely to break out, okay? And, to see a decent move. It will probably take some news, a major catalyst to get this thing going. That's usually what gets it started. So I would be anticipating higher prices soon, but this is a tough spot to be taking the risk. So the ideal opportunity will be the range low. All right, the range lows. You have a range low right here, which is what? 384, somewhere around there. That's one range low. You have another range low here, which is in the 336 area. Can Tesla test those prices? It's possible. It may get there, it may not. The thing is, if it gets there, that's a potential opportunity. If it doesn't get there, then you have to adjust. So there's a couple of things you can consider here, especially if you're longer term oriented. You can wait for those opportunities, or perhaps you can take a small bite. You're willing to take that chance that this triangle unfolds on the side of the trend, which is what the tendency should be, which means eventually it should break out. Then you can take a small bite here, but keep in mind you may be testing those low 300s. So if you take too much size, like let's just say normally 100 shares of something like this would get you nervous if it pulled back 50 points, then you should not be taking 100 shares, okay? Or if it pulls back 100 points. So perhaps you take 5 shares or 10 shares. You're not going to care if it pulls back. And if it pulls back, now you have an opportunity to add, okay? And you're not a weak hand. So while everyone else is banging it out, you're buying it from them at good prices, right? That's the long-term mentality. So that's something to consider. Or you take your small bite now, and as it breaks out, you buy, you take your additional small bites. So it breaks out, above this, what is this, 450 high, you buy another 10 shares. I mean, so if you buy something at the high, I'm not really a big fan of that, but if you're only buying 10 shares and you own shares from a much lower price, you're averaging in, okay? And you're averaging in as momentum is going your way. If it pulls back, so what, right? 10 shares. It's not gonna be that painful. So that's how you have to think of something like that. But technically, for a swing trade, I don't like this location at all. I'd prefer to see a range low followed by a setup and confirmation if I was going to do anything with Tesla. Typically, this tends to be the leader for stocks like Nikola, which is starting to perk up a bit, right? Workhorse, which is it's been trying. These things have been trying, right? NIO is just doing its own thing. What a crazy stock that was. And in LA, I know we had a bunch of people in this one, right? This one's been a little wild too. Look at this, right? I would be expecting these things to follow Tesla more, but they're kind of doing their own thing right now. All right, that's fine. They're not always going to follow the way we think. We have to adjust to what they're doing. Okay, good question. All right, let's see what else we have here. Jay, what do you think of corn? So what is the corn ETF? Let's see. Corn, is it CORN? Is that it? Corn. Let me go to the. What is this ticker for corn ETF? I'm looking for it. Corn. I don't see it here. Would it be futures maybe? Let's see. Corn futures, ZC. That's probably the ETF will probably look similar to that. Maybe I should just type in corn ETF. Let's see, because I don't follow corn. Yeah, ZC shows up here. CCM, mini futures. I don't see any ETFs. Here we go. So I'm seeing here, wait, I saw one there for a minute. Hold on, where is it? National, no, corn. Do you have the ticker for corn? I don't see one here that I can, I don't see one here. National Corn Index. I'm going to go with the futures, okay, which is ZC. Let's take a look. ZC. Now, so again, this is going to be China trade situation, right? I would imagine with corn. I guess. I don't know. I don't know the fundamentals that are driving corn. Probably a farmer would know better than me. Here's the thing. Let's look back a bit here. Man, this is very sparsely trade. This is not very sporadic. It took out this resistance here. Oh no, I'm looking at the wrong chart. Hold on. No wonder. Sorry, hold on. So ZC, it's probably ZC1. That's probably the corn. There we go. Corn futures. Got you. Here we go. All right. So let's look back again. Let's look at our levels. Right. So we're looking at the corn futures, and I would imagine the ETF is going to look very similar, just like the SPY, just like the QQQ. Oh, it's just CORN. All right. Let's take a look. CORN. Oh, commodity trust. Oh, got you. Here we go. All right. Well, so it was kind of similar. Let's see. Is it similar to the corn futures? Oh, not really. All right. So let's take a look at this thing. So again, it's sporadic. I'm not too surprised. I'm going to first point out the levels, right? Let's take a look at the levels. And let's see what we got here. So right now, so corn has had this recent bullish structure. Nice move there, right? Nice move on corn recently. It's been taking out resistances. Okay. We are now going into a resistance, old support, new resistance at 14 1/4. Okay, you see that? So I would be careful. I wouldn't buy this right now. That's a tough spot. Not a good location. I'd want to see a pullback on corn, at least a test of 13 and a half or somewhere maybe 13 and a quarter. It may not make it. If it's going to stay strong, it may not go that low. So maybe at least halfway there, something like that, because you do have a nice clean structural trend going on here, right? Nice clean cut higher lows and higher highs. It's just you're in a tough spot here. It may break out, it may not break out, right? And since the location really favors faking out, I would rather buy a support or near a support than into a resistance. Okay, we see this a lot. So just something to keep in mind. You're at an inflection point. So not a good place to chase. Otherwise, it is strong, and it may make the higher high. If it does, then this current resistance right here at 14 and a quarter could be a possible support to look to in the future if it really breaks out and clears that resistance. At some point, it's got to test the support, okay? And that's really where the higher probability, lower risk opportunity is, okay? So thanks for bringing that one up. Okay, Seaboard, thanks, pal. The price target for... No, I don't have any price targets. I usually don't make those type of predictions because things change, you know, and I'm very focused more on very short term price action. If something is going on, like, you know, if Bitcoin's going nuts and Bitcoin's pushing 20K, you're not going to see me come out and say 30K next month. You'll see other people on TradingView doing that, but you won't see me doing it because I know better. But what I do in those situations, like for example, if you do have inventory, I'm always looking to capitalize on the opportunity that exists at the moment. I don't make predictions. I adjust, you know, I evaluate price action and I adjust. That's what I do. So, so that answers that question. Let me see here. What else do we got here? Waves, Uni. Wow. Okay. 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 Wow. So I'm talking a lot here. I'll do this for a couple more minutes. I can't do a 2-hour session. It's almost 4:30 my time. So we'll do a couple more and then I'll wrap this up. But I really appreciate everyone's questions here and everyone's participation. I do love to see that. So let's see what we got here. Waves. So I haven't heard about Waves in a while. So let's take a look at that one real quick. Waves, USDT. So another altcoin. So some of these altcoins are going to perk up. Okay, this is interesting. And I think XRP was also picking up a bit too, right? So this is a good sign as far as relative to Bitcoin, right? Because that's the first thing I want to ask is, how is this thing behaving relative to Bitcoin? Bitcoin's on highs, Waves is on highs. Okay, good start. That's a good start. But I don't want to buy the high. This is a vulnerable location, potential failed high situation. Not a good place to go long. If you are long, good place to distribute. Okay, especially see that pin bar? What do you think is going on in that pin? What do you think is going on in there? People distributing. All right, so that's a good place to do that. So as far as where to buy this thing next is the question. If this is going to continue to follow Bitcoin. Now, do you see the difference between something like this and something like OMG? Do you see the difference? This is what OMG should look like, by the way. It should look like this. All right, and I'd be much more excited about it, not what it looks like. So right now, inflection points. This is all you got. This is really all you have right now. Is what, that 3.5 to the high threes area. That's all you have. Okay, so either it retests something like that, or maybe it finds support sooner, which would be a minor support. Perhaps it finds support around here. Let me draw a box there. Perhaps it finds support around here somewhere, possibly in the high threes or maybe low fours, something like that. This thing's at 484 right now, so it can pull back 80 cents. That's pretty reasonable. Those would be the places I'd be looking for opportunities. You don't want to buy this high, right? You're going to have a lot of people buying the breakout, hoping that it goes to 10. But, you know, and it may, here's the thing. Occasionally, buying a breakout will reward you, okay? But if you take that same trade 10 times, how many times is it going to reward you the same way? Over time, you will lose money taking them, okay? You will lose money. So it's not a good trade to take, even though it may pay you one time. That's a very tricky part of the market. It's a very similar technique that casinos use, right? You never play a slot machine and occasionally you win. What does that do? It makes you think that, you know, oh, this machine is hot. I'm going to keep playing this machine. And do you ever money in the long run playing a slot machine? No. Casinos do, not you, right? So it's the same idea. Don't want to get sucked into that. Wait for a support. All right, so that's waves. Not bad though. It's nice to see that there is a relationship. At least it's moving along with Bitcoin. I like to see that. Bitcoin new high, waves new high. Okay, good start. Like I said, wait for a support. Use Bitcoin as your guide. Okay, UNI, USDT. Let's take a look. Garbage. Right off the bat, garbage. Right, garbage, because it should be up here. I mean, it's tried with Bitcoin. Okay, it's tried something, but I don't know. I'm not a big fan of these. And if I'm going to do anything with something like Uni, I want to see a test of low or something. We don't have a lot of data on this. What is that? $1.75-ish area? I'd be looking at something like that, if anything, right? I wouldn't touch it up here. Now this is a very cheap thing. What is this? 3.5? So, you're gambling with these. In my opinion, you're gambling. I would wait for a better price. If I'm going to judge this technically, I'd want to see at least some sort of pullback. This is way too early. And why isn't it doing better? If it really touched this high of $14, if it really touched that, why isn't it anywhere near there now? If it's not following Bitcoin, I'm not really too interested. Okay, so thank you for bringing that one up. And Ethereum. Let's take a look here. BTC possible. So, all right, so we'll see, Bart. As far as Bitcoin possibility, do I think it can reach 20K in the coming year? Yeah, I think 20K is it's within reason. Structurally, it's within reason. The low 20Ks is structurally within reason. Will it get there? I don't know, but it's within reason. It's not unreasonable. Okay, so I'll say that. I mean, the structure is bullish, right? So in a bullish structure, I expect higher highs, and we're making a higher high right now. So some sort of pullback, I'd expect another higher high, and that higher high could be 20K, possible. All right, so I'll say that until the structure changes. And I've been saying this since 6K, okay? And Andrew too. We've been talking about bullish Bitcoin. Actually, if you go back, we've been bullish since 3K. A lot of people give me a hard time about that when they were all predicting Bitcoin going to 1,500. Obviously, we saw which way Bitcoin went. Didn't go to 1,500. All right, so Ethereum. So Ethereum is a Bitcoin follower, right? And so Ethereum, this is going to be tough. If Bitcoin's at a high, so this right here, Ethereum is giving a buy signal, right? That is, we can argue that this is a buy signal. Took out the previous candle high. It's not exactly an inside bar, but it doesn't always have to be. But you're at a tough location, right? So very risky. If you're in Ethereum long term, again, not a bad place to take some off the table and buy back lower when it pulls back. These things pull back, as you know. Not a good place to put on Ethereum now. So Bitcoin is the guide. If Bitcoin pushes that high and pushes to 17s, I would imagine Ethereum is going to follow. And I would imagine Ethereum may test those high 4s, maybe even the low 5s, possible. Okay, if Bitcoin pulls back, then I would be expecting this thing to be testing, what is this, 420, 425, somewhere around there. Those are your levels, okay? And Bitcoin has to lead. We see buy signals in these things on their own all the time, but I don't trust them. These things don't trade on it. Ethereum does not trade on its own. It's nice to see that Bitcoin is on its high and Ethereum is near its high. That's good enough. I don't see Ethereum pushing lows. I don't see Ethereum breaking supports, okay? So it's definitely following the bullish trend, and Bitcoin is the leader. So that's how I would judge that. All right, so good questions there. I think I got everyone's questions. Now it's almost 4:30. Yeah, how are we doing with time? Okay, I answered everyone's questions. So, man, I've been talking for a really long time. I try not to make it this long. But anyway, I'm glad to answer everyone's questions, and I'm very happy to see all the participation. Have I answered all your questions? I think I have. Just let me know if I haven't. I want to thank you all again for taking the time to participate, ask great questions. Again, if you haven't checked out our website yet, check out greenbridgeinvesting.com. Check out our free trial. Check out our chat room. We do have a swing trade signal service by text, by email. Subscribe to the channel here. Like the video if you like it. I hope you like the video, because these things, they are, I want them to be valuable to you. I want you to come out of here with some more insight. I want you to come out of these videos with more confidence, so that you have a sense of what's reasonable and what's not reasonable. Most importantly, I want you to come out of these videos with the insight to be able to see through the noise and the garbage that other people are trying to push on you. Okay, whether it's other gurus, whether it's the mainstream news, whatever it is, I want you to be able to have the perspective to draw information from a chart and be like, okay, well, they're saying Bitcoin's going to 20K, but the chart is saying a different story. I'm going to believe the chart. That's how I want you to be able to use this information. Okay, cool. I'm glad you find these valuable. All right, everyone. So with that being said, I'm going to wrap this up. Again, enjoy the rest of your day, the rest of your evening, wherever you are in the world. Again, I thank you for participating, and I will see you in the chat room tomorrow. Thank you. Thank you for watching.